Let's get our next guest analyst in here. He's batting cleanup. He's our last guest analyst for the day. That's Ted Seifried, Zaner Ag Hedge. Ted, okay. We'll put you to the test and see if you can tell us anything different that the 9 other people before you haven't said already today.
Well, not that I'm not a big fan and friend of the show, but I haven't listened to the other 9 analysts. Yeah. Well, what can I say? You said it. Very tight range in corn. Beans are down, taking back a lot of yesterday's gains. So we don't have a whole lot of traction in either direction here to start the week. Now, I guess, like I said, I don't know what anybody else talked about, but let's talk about those CPI numbers coming in hot. Inflation coming back, maybe? And if that's the case, then, hey, let's look at that big fund short position. Everybody's talking about how, funds are close to record short. They got to cover at some point. And to this point, I've been sort of contesting, no, they don't. There's another very large group of individuals out there that are yet to sell, and that is your farmer, right? I've actually had a lot of conversations this week about guys making cash sales. So that's a very large potential short position in the market, right? So you have to take that into consideration. However, what I will say after this PPI, the CPI number, is that, look, these funds that have been short, go back a year or two, they had really wanted to be long commodities as a whole, but specifically agricultural commodities, because that was their inflationary hedge. If they need to flip the switch and go from being short commodities, which part of that I believe is based on deflationary ideas, to now, inflation's coming back, we need to be long commodities. That could be a major reversal in the markets. Now, I'm here to tell you, Scott, if that happens, it's going to be a golden opportunity for us as producers to be aggressive sellers, because fundamentally speaking, I don't think we can support a sustained rally in any of these markets when you're talking about 2 billion bushel carryover or 2.2 billion bushel carryover in corn and over a 300 million bushel carryover in beans. And these numbers seem to be growing. Again, short of a big catastrophe on that second season safrinha corn crop, I don't know how we'll get excited about our growing season given what happened last growing season. And everybody's sitting here doing their numbers on guesses for what the USDA outlook's going to say later in the week. Man, I got to tell you, the numbers do not pencil well. I'm fighting myself to not have a 2.6 billion bushel carryover for next year and a 500 million bushel carryover for soybeans. I hope
That's probably what the funds are looking at. So, we'll have to, I hate saying it, but time will tell, but it's going to be an interesting time. That's for sure.
Let's go back to that CPI number. I think something that you and I had been talking about over the break is that, this really leaves the door open for the Fed to continue to raise rates rather than lower rates like we had been last year. And if that happens, that could be a little bit scary for beef demand. And let's just be honest, we've had a really nice run off the lows, those early December 6th lows in both feeders and live cattle. It's been a very organized move higher, short of the small kind of sideways consolidation period that we had right during the holiday weeks. We haven't had a bigger correction. And the way that it's kind of acting, it looks like it might want to roll over and have that correction. I'm still pretty friendly unless, again, things start getting a little dicey with the economy. But until something like that happens, I think there is more upside potential. But just to kind of clean up this market, make it a little bit more healthy, I wouldn't be surprised. And I actually would kind of encourage a bit of a correction in live cattle and feeder cattle. And then for hogs, I don't know. One day it's one thing, the next day it's another. I think this is an overall longer-term bottoming process, but it is a process. And we continue to be, struggling with that on a daily basis.
Yeah, I'm really interested to see some more consumer numbers. If they do look to say maybe raise rates or maybe not raise them, but keep them at these levels for a lot longer. And by the way, everybody thinks they're high. They're not high. We're right at the rate that we have been averaging since 1971 for interest rates. So maybe we have to get used to it here. But yeah, it's going to be interesting. The consumer is 70% of our economy, and they're the ones that are buying all this beef. So we'll have to wait and see. Thank you very much. So great stuff as usual. Ted Seifried, Zaner Ag Hedge. Bring it back here to Nashville and give it back to you.
Thank you, Scott. Of course, Cal Guy Close coming up at the top of the hour. Looking forward to it.